All right, guys, Sam here with you. It's Friday, December 21st. We're going to finish up with a look at Bitcoin. Now, I'm going to spare us the long-term count. I've been through it so many times, and perhaps you've seen my partner Quan's video, his thoughts on where we are long-term. So what I'm going to do right now is just we're going to focus on this impulsive structure that we have coming off of this low down here at 31.21. So I'm on a 15-minute to... this is Bitcoin to the dollar on Bitstamp, just to mix it up a little bit. So here's our low. It's pretty straightforward here. So we've got a 1, 2, and then we get great subdivision here. So it looks like we have this clear extension in the third. So we're well beyond the norms of what you'd anticipate relative to that 1, 2, right? So at first glance, it looked like we had 1, 2, 3. This would have been in line, and then 4, 5, but we have the extension here. So we're getting the runner. The extension is in the third, right? It's good news for bulls. Note here, as we carve back in, this was just gorgeous here. So for the 3 to the 4, right into the Vegas wave at the 50, and then up we go. So algo plays get target, almost gets second target here. So looking at that, so on the assumption that that's correctly identified here, I don't know that there's a better way to count that. 1, 2, 3 is in. Now it looks like we're getting the ABC, so it's hard to argue with this. Right, so this looks like a good. So we may have a flat. Looks like that's 3 followed by 3, and it could be 1, 2 is in ABC and the 2, 3. So we've got. If we measure it, if that B is correctly identified, that's the 1, there's the 2. So we're already through 100% the length of the 1, so we have a contender here for the 3. Now, nothing says that we're done here. Here's a, here's the high probability for a third. Now, we are trying to keep this in the context of the fact that we're trying to finish in ABC. So we want to put that in sync with what we're trying to establish for the retracement on the location of the proposed 4. So I'm going to pull that off just for a second. So if we look here, working from our proposed 2 low to this currently identified as the 3 high, well, so we're trying to identify the 4 here. Well, there's prime spot for it, but we don't have enough here to suggest that we're finished. So we can't even call the 3 done just yet. So right now we're driving down. So until we get a pivot here, reluctant to call anything other than we're in the process of working through the C wave here. So 3, 4, 5. Now, ideally, we'd hold the 4 here would hold above the 50. That would be ideal. So we'd get the 4, 4, and 5 coming down here. So we'd finish with something. So it would look like this: 1, 2, 3. We don't know where that ends, but we are at least at 100%. And through 100%, and then we'd finish up with something like that, which would put us at the C, completing at the 50. So we'd have that nice confluence of a finishing pattern here, finishing the corrective action here of this entire impulse. Now, because of the shallowness here, I'd be keeping an eye on the all the way, right? The all the way halfway back here, because the 1 is so small and the 2 so small relative to the entire move. When they're that close, I think you want to monitor both of those and then look for any confluence that you can find. So if we work in looking at both of those, all right, well, we get kind of a, we're getting a band here because, again, these are so close together. There's not a huge distinction, but I'd work that. So I'd leave both of those up there. And so here would be the prime zone looking to finish here. We'd have that confluence. Now we also have structure. We've got this, right? We can always look left. Oscillators here might be worth taking a look at here. So what else is there? Well, we've got that, right? So this, we can't ignore that. That would be ideal. So the thought being potentially resistance would offer that support. So that might be a reasonable spot. If you're considering the long here, that's not a bad place to consider putting your stop. All right, so you keep the risk reward reasonable. Just looking at that, if we're going to get this realized here up at this algo target, that sets you up for, what do we get there? Yeah, let's do a slight front run. Here's the targets. Now, if you want to give it the full depth here, well, then you've got 3.69 to 1. You want to go underneath that pivot, use that structure. Well, tight, right? So you risk getting stopped out, so you might have to swing at it multiple times, right? That's when you have a tight stop. Very easy if you don't get the turn exactly right. So there's a couple of ways to approach it. You might use this. You could use this structure here, right? You got to use something, right? So this is just using the market, okay? So if we go that far, well, we know that the count and the probability of reaching that target is reduced dramatically. That's giving it maximum room, but you're reducing your risk reward to 3.69 to 1. Not that there's anything wrong with that, and, right? But you use one of these pivots, then there's 7 to 1. What, with a little more cushion, if we get some volatility over the weekend, you got a little more cushion. Now, but here's the reality. If you get stopped out on something like this, so if this comes down, takes you out, you got to be quick to go again, right? Because we wouldn't invalidate the pattern. So if you take the small loser here, right, and that's, depending on how much risk you want to allow for it, right, that would be a function of doing the math, then that relative to the size you're taking here. You don't need to swing for the fence on this. So, but my point being that if this comes down, you get stopped out. If it pops and then you get a retrace, be prepared to go again. That's just the reality of, now you're giving it something like this. Now I would approach that differently, right? If that gets stopped, well, you want to let this settle and see maybe the count is wrong or something else is going on. So I wouldn't give it that much room, right? I'd be maximum. I'd give it that. So I could get a 7 to 1. 3, 4, 5. Right, nothing wrong with that. Good looking trade. So that's right there. But this needs to finish. We're not done yet. We've got the 3. We don't have the 5 yet. Now, interesting. It looks like we're getting a little pivot here at the 38. So potentially now 3 can be going in. So you want to watch for the pivot of the 1. See, are we going to finish? Do we have a diagonal potentially? Right, because since we know we're already longer than the 1, this is our candidate for a third. So if we're going to come up and we're going to overlap that 1, now we know we're looking for more of a diagonal structure. Right, so that's why it's always good to wick off those 1s, because that will define what we're looking for, both in terms of where we're looking for the retracement of the 4 and what kind of target we're looking for. So we can get those to line up here at this hot box. You got 7 to 1 trade there. But keep in mind that even if we get that, right, we're just getting rolling. And if we did get that, all we've done is complete a proposed 1 wave, 2 to come, 3, 4, and 5, all still. We'll go to white, and we'll go up. We can go to enter. So that's what we're after. So the 1. So if we finish up here, come here, right, that would be the 1. We'd be looking for the 2 off of that. So if I'll just give you an idea here. So if we get the 1 there, then here's the 2 so here's the golden zone. So you'd be looking for the next setup. So if you want to be more conservative, you're still a little gun shy of getting long of Bitcoin here. So that would be the more conservative way. Let this establish so we know we've got a good solid, with all the subdivision that we'd hope to find, a good solid impulse off of this low down here at 3,100. Then you wait for this, and you get the A, the B, and the C, and now you're in for the bigger 3. How about that? Right? Still long way to go. Look at that. That would be a buy at 37.50. Right? It's long way to go. Right? So if you don't feel like you're missing the party if you're not catching this, or you're reluctant to go just yet. Right? If this completes, the 2 will follow. All right, guys. Kind of a short one today. Kind of nice as we go into the holidays. So next week, I'm not sure we're just definitive about our schedule yet. I'm not sure about that. So stay tuned for that, right? You'll know, right? If there's, members will know, of course. But if you're watching on YouTube, we'll probably post up some content, kind of a function of what the markets are doing. If they're volatile and they're moving, we'll probably do some updates. All right. Otherwise, going into the holidays here, would certainly be reduced amount of content that we put up. But what a great time, if you've got a little break in the holidays, to be doing a little training, a little study. Maybe you're sharpening up your technical skills, which is my not so subtle segue into the links below. So if you're interested in improving your Elliott skills or mastering some of the things that we're teaching you, you might consider giving us a try, and you can find all of the appropriate and associated links underneath this video. You can always find us on Twitter as well. Okay, guys, have a good weekend.